And welcome to non-farm payroll, my friends. This is the ThetaWaveTrader, Darren Hancock, and it's September the 6th. And what does it tell us about non-farm payroll? Do you see that today? Whew. My friends, it is non-farm payroll day today. And I even wore my non-farm payroll shirt right there. It's all fun and games till someone loses an eye. Or someone needs an eye patch. That's how it works. Yeah, it didn't work out this way, but I got my non-farm payroll t-shirt on today. And we're watching this huge response this morning. Like, look where we're sitting for our regular trading hours when this puppy opens up. We're at 897 as the start. And where we're sitting right now is 18,941. So we're like way up here. 918. Well, no, we're not. We're 18,941. We're just down below us here. So we've got quite the fair value gap to reach into. That'll be our opening range gap this morning. That was a bit of a crazy start to the day, hey? Look at that. From 8 all the way down to 18,720. 18,920. So 200 handles that moved in that first 15 minutes. That's craziness. And if we look at that over electronic hours, since non-farm payroll opened up right there, yeah, that literally shot up 200 handles. It went down, right back up 200 handles. That cleaned out a lot of people if you participated in that. And you don't want to be mucking around in non-farm payroll. That's why it's heavily manipulated on Fridays. So you got to stay out of it. So I hope you guys have been safe there. We're looking for a retracement now back into the opening range gap. So that regular trading hours that we have talked about, I'm going to leave this on regular trading hours. And you'll get a feel for where it wants to reach for. From here and back to so we'll put in here just marking up my chart right now. Oops. We're below, we're inside. I'm looking to go lower now. Taking out an old high. We're looking for a retracement back into this range here. You see what we got on this morning. Five people watching already. All right. So yeah, looking for a run back into this range again now that we've taken out these highs. We've got a reversal pattern happening. Looking for this order block here. Make this a little bigger for you guys. Looking for this order block to get taken on the downside. If you've missed this entry here, then look for this candle here. Return, pull your fib tool from here to here, and start looking to work this fair value gap below you here. Finally, our natural gas, we called this, I think we were calling this last week, looking for a reversal back into this range here and looking for to run back up into this imbalance. You'll remember me talking about that, and there you go. You're inside there. So that's from that low, 13.17. That's $1. So there's almost 10% return on your money just inside that range there, trading the US fund, natural gas. Nat gas over here. These were the levels I've been having for a long time now. We wanted to get above it. We did. We found support at it. Now we're pushing higher for the highs, and you're pretty equal with that this morning. So is it algorithmic, folks? Yes, it is. It is. That's just natural gas Canada. That's US natural gas. The power grid, looking for it to get above here. I don't know who's trading power grid oil. We'll get to that stuff in a minute. Bitcoin. And it's not all hindsight. I teach you this every morning. I show you this, and every morning we look for this. So if this is hindsight, you think I'm just cherry picking levels, stick around. You'll see that it's not. So this is an example of what we'd be looking for at this level. Trades below it, comes back up, right up, perfect entry inside, and slammo. Takes out all of these lows here. You wait for the retracement. See, if you're looking for this retracement here, notice how we don't trade above it. We're taking out that low, so you think, oh, is this going to be the retracement? Nope. This comes right up, back up, fills it. Doesn't do that one. It doesn't take out that high. And then we get another reverse, and we took out that little high there, another reverse, and down we go. This one here, wait. Finally takes the high here. Comes back inside the range. You want to discount. You don't want to be buying this and chasing after this in a premium portion of this range. So you wait for a discount. Comes right back into the discount. Consequent encroachment of this fair value gap. And then continues to take out the highs. Now you're looking for this one here. So not cherry picked, because right there is where you'd be looking for your next one. If that trades below that, takes this candle out, look for support inside that whole block there to go lower inside that range. I'll put them on the chart so you get to see where those who are Bitcoin fans. Soybeans. Didn't quite come down to the level we were looking for yesterday. Just held up short. Kept going higher. This is where we wanted it to come back to, and it didn't. Just shy of it. Keep pushing higher. We wanted soybeans to go higher. We wanted to reach for this liquidity above the market. You would have had to have looked for the 1 hour chart for your entry down in here. That was our objective, but you're looking for any opportunity as it gets close to that to get a reversal, and you'll probably find it in there. I'm not going to dig around now. You guys know how to look for it by now, I hope. We finally popped above that little freezy zone that we were looking for. So this is the next level in here. We traded above that yesterday. Now we're coming back to it today. You want to see this provide support, and you want to, if this has really got some power now, you want to see it get out of here. If not, trade back to these old highs, back to this open, close, level. Leave this open. You can dip into it a little bit and then go like 25% of it. And that's what I'd like to see. And then keep going higher. Or just leave from here and just give us some legs and start getting above these old highs right here. For wheat. We've just cleaned out the highs here. These relative equal highs this morning. Now a retracement back into these two candles would be nice. You can come back anywhere inside this zone. Consequent encroachment puts you right back on the order block, so that would be nice to see that and leave. I don't want to see it come back down into here, otherwise we're back into the range again, and this now becomes between here and this fair value gap below you here. You got a premium and a discount. So sugar, a little retracement today into this level right here would be nice. Consequent encroachment to hit this hold order block and start moving. Coffee did exactly what we wanted finally yesterday. We're looking for coffee to break down below the low, and we were calling this last week, right? We're looking for, even when it was right up here, we were starting to draw out all these levels, and we were waiting for it to trade through. We said no, it didn't, because the body hadn't made it through. Just came back into the order block above. That validates it right there. Comes back to it, drops below, finally gives us our opening. We're waiting for it to trade back in. It didn't on Tuesday. It didn't on Wednesday. Yesterday it did. Finally gave us the entrance. And look at that. What a nice little... And my objective. I hope you've been watching that. I gave you that entry for... And this is on the daily a week ago. Or last week. What was this? Thursday? The 28th. When it was making this and coming back down, 28th, 29th, I was giving you this. We want to see it come back through here and take this guy out here. And there you have it. And that was the downside objective, and we're hitting that now. Algorithmic or not? You decide. That's coffee. I've given you multiple different asset classes already this morning. It's true. It's algorithmic. He's not full of shit. He knows exactly what he's talking about. So, live cattle. Here's what I got for live cattle. You want to see this hit off of here, this consequent encroachment right now, and I want to see it start pulling back. I do not want to see it driving down anymore. If it does continue to drive down, look for this fair value gap to fill. And I don't want that, because it shouldn't. If we start getting below the consequent encroachment, it loses its luster for me. I start thinking it's going to go a little lower, and we may be returning for the lows here. We haven't broken market structure really to the upside yet. We've just got a change in direction. So we're back inside this range. We've already hit the premium level already, and we could continue going through. So watch this today. If we continue to close, we'll know where it sits today, or where it ends up today will be important for next week. So right now, don't touch it. Wait. If you are long, your stop loss has to be just below this low here. And if you see it starting up, even if it pierces through that, close out your trade. Or if you want to go long, right there, that's your perfect entry, right off the bottom of that. If it starts to close through, you want to see it trade back to it once to give you an opportunity to break even before taking your stop loss out, which you'll have to put down here at the low. Oh, Coco. Why did we put this level in here yesterday? Oh yeah, it was the low. So we wanted to see this trade through, come back inside the gap. It hit it, closed on there yesterday. Let me make this bigger, and you guys are probably squinting your eyes here. See how it closed right on it, and then literally gapped up, came down, almost touched it, and or did it touch it? Nope. And now we're back inside this range here. Do we take those lows? Yes, we did. So this becomes the new area of interest for me. Come on, make it bigger yet. We have an imbalance right here. So you're inside this range. You've got this above you and a little imbalance right here. You have to get above these candles, find some support at this to start running those highs. Otherwise, just coming back inside this range. Consequent encroachment will be fine. Leave that open and then continue going lower. That's what I'd be looking for. Little piggies. We have a big monster gap in there. Get rid of that projection. That's inside the gap like this here. Work in that gap to fill. Work in this gap to fill. So I would expect at least 50%. Look, take this gap here, block it out, look for 50% as the upside. That could just hold there, turn around and come back down again. It all depends on the 50% of that range. If you close above or below it. Gold. Gold finally hit that objective I was looking for here. Just shy of it here. And we finally came up, drove through it. We got relative equal highs now. So that was the upside objective. That's dusted. Notice the bodies are still staying below it. And that was on non-farm payroll day, 8 o'clock. Straight up, straight down. There's a lot of damage, but it finally reached the objective. Now I want to see it stay below here and then trade back into this area here. Or back into that. I'm going to put this little line right here. See this wick, this big downside wick here? Let's see if I've got that right on the money or not. Just trying to eyeball it. Oh, I am off. I got it at 62%. Right now it's coming back at 50%. Keep your eye on that level. You see how that level acts. You got a value gap here and here. I'll put that line in there. Come back to that later. Side. Look at those objectives we put on oil yesterday. Hit them. Came right back up, stayed inside it. Look at that. Literally popped off, came back to it, and left yesterday. Man, if you guys don't think that's algorithmic, and I've definitely got something there with my particular setup. I'm waiting for Michael to say that this is one of his 81 entry exit points. I think I've discovered one of his extra ones he hasn't taught yet. But as you see, I've been calling these on multiple different time frames over and over again. So I hope you guys see it, practice it, look at it. Don't take my word for it. Check it out for yourself. Yeah. Our little intuitive surgical instruments. I don't know why I'm still watching this. I'm just trying to show you the algorithm still works, even in some stocks, or even in not some, but all stocks. See how we've traded below this breaker, takes out these highs here. This large breaker, this little guy here. We trade back into this big order block. We traded below that fair value. Yeah, that gives us an indication. Guess what? We're heading south. Oh, we're going higher. Now we capped below. So now you're going, I'm back to going low again. Comes back up, taps that level, and then leaves. Runs back down to the price cap we were calling for yesterday. And we hit it. And now we're reacting off of that. Now what I'm looking for is for us to get above here, find some support inside here, and start running back up into that level. So I've got to get through this level here and that candle. If we come back and find support off of those, then we're looking for higher prices. Otherwise, we're inside this range right now. From here to here, right back up into that breaker. But we hit our downside objective on that one. And what was this? This was the, oh, this was the Michelin tire one. Michelin tires. This is the France one, traded in France. Clermont Ferrand. Anyway, let's find it. If you guys see a different stock you want me to look at, that'll be a stock of the day kind of. Give me one that you're interested in, and I'll pop it up on there and we'll have a look at it. Let's go back to our regularly scheduled program. Highs taken. For me, you got to get below all this consolidation. This would be a cam 3 setting up here. Let's see a cam 3 getting ready to set up. So we got cam 1, 2, and then a 3 in here. Good morning, Hadi. Good morning, my friend. How are you? It's nice to see you back. Big coffee this morning. Mr. Pips, how you doing, sir? Good morning. Hans has been around with us for a while now. Welcome, Hans. Campion, good morning, good morning. Curry Fish, hello. And Craig, my buddy Craig. Back now, did I miss crude oil from you? This was just the levels we put out here yesterday that they hit oh so beautifully. Drove through, cleaned that out. So where's my next area of interest, you say? Where's my next area of interest? On the hourly chart, I'm looking here on Mr. 1 hour inversion. And I want to see that stay above there. And we need to get above upside objective. 50% of this wick, trading through it. I want to see that high get taken and then start running back into this. If we can get above here, I'm looking for another run back up above this level. If we drive through, if not, if this is just a peak out here, roll over and come back down again, start running for these relative equal lows we've got sitting right below us here. Then look for the high. So upside objectives, we got 50% of the wick, the whole wick, and then 50% of the, this is a breaker right here, this big, these 3 candles that take out that low. The last candle is the most sensitive. So you take your fib tool, which I didn't do, I just kind of eyeballed this one. So I'm just slightly off this morning. And away we go. That's upside, Greg. So if we start trading through that, so these are the levels I'd be looking for reversals. And if it just keeps climbing, then that's the level of support. As soon as we climbed above this here and come back, find support inside it, if you're looking to go higher, look for that high first and then there. And oh, I wanted to show you this one from yesterday. We were doing, remember that euro one we were doing? I just want to see how that panned out, because yesterday I saw that it hit some levels. Let me move that over here. I just want you guys to see this one. Remember when we were calling this yesterday? Oh, it's opening. Let's stretch this out here. Remember, we wanted it to come down into here. So if I move this guy out of the way, that's as far down as it comes. It didn't come all the way down to where I wanted it to come down to. Let's stretch these guys out a little bit here. And oh, right there, that guy. So we wanted it to come up to the midpoint. It did. Then we wanted it to come down to the bottom point. It did. Then we wanted to see it run to the top. It did. And then I wanted to see it come all the way back down. It went up above and then finally came all the way back down. That level. Let me draw this here. Pretty damn close, I'd say. I got you some, you hit your upside objective. We did take out those highs, but we did get overall what I was looking for yesterday. Didn't do this straight up and down thing. So if you're hoping that when I give you these things, that it's going to go straight there, it's not. This could be one of those wandering things, but it did exactly what we're looking for. Pretty close. I'd say that's pretty exact on a guess, on an assumption, on a imagining price action in the future. I have to high five myself. That kind of worked out. So that was Euro. Let's put that back over there. All right, so regular trading hours. Oops. This is what Michael talks about. Regular trading hours. 9:30 to here. As soon as it opens, you can expect a return to at least 50% of that gap. So if you, not that you're going to take any trades today because it's non-farm payroll, wait for things to settle out before you see the markets cleaning up. But we did see this reversal here. And then it gapped down, came back to 50% of that trade, and then continued to take out the lows. This he calls a sure trade that works a large percentage of the time right from the opening. Check the gap. This is a discount fair value or discount regular trading hours gap and trade back into 50% of the range. That's always a pretty good certainty. As soon as it opens up, you have a buy or a sell that gets you back to 50%. Take off your port, at least half of your position there, and then wait for the close. If you don't get the close, at least you got that. Moves your stop loss to break even. If it comes back and takes you out, you got a chunk in that first little 1 minute trade. We trade below this order block, come back inside it. Also the top of the daily fair value gap here. We're revisiting that. Keep your eye on this guy here. And we draw that regular trading hour gap out into the future. I'm going to have to put that as a, is that a level? It is a regular trading hours. And you move that out into the future. These levels will become important. They will become important, my friends. So pull that out into the future and keep an eye on it. So Craig's bullish. Excellent. You're bullish in oil, I gather. I got a buddy of mine used to love trading oil. In Canada, it's one of those ones that manages or moves our dollar around a lot. It's the price of oil. Back up to 25%. Looking in here. Now we've taken out this low here. We've had our immediate rebalance. So watch this consequent encroachment here and start pushing up higher. We got to see this close above here, this candle's high. If not, we're inside this range. What's this range? And we're still creating the opening range gap, so oops. We did not get a body above there yet. Trade below the low. Look for this down here on the 15-minute. You see, we act off of that. So now I'm just looking for opportunities to get a reversal. You look for consequent encroachment, close on the 15-minute. Fair value gap, mean threshold, 5-minute. Consolidation. Half the wick, cam 2 right there. Trading crude on the long side. Look for ES to get to 509. $502. 509 to 502 on ES for downside. I don't want to see it getting lower than that. And then start going higher. Wheat is giving us a nice little push higher. We've taken out those highs now. Lovely, lovely. British pound. Looking for its recent low at 830. And euros diving below that already. It's taken out that low at 830. This is supposed to be Aussie dollar. They're all taking out their equal lows down there now. Wow, that non-farm payroll really ripped through everything. Took the highs, left the lows, overall left the lows at 130 there. Okay. See some ETFs are on a turn. Those of you who are in Canada, like some ETFs. I see a couple of them on a turn. You have these relative equal lows to below you here now. Now we've taken all the way through here. Look for that cam model too. You're into a 1. 2 would be here, somewhere right around there. And if you close below 50% of that wick, then you're running for the lows. So keep your eyes on that level. This looks like it's going to be hunted for after lunch. Let's get back to electronic trading hours. Look at this electronic trading hours. Highs taken, reverse, right back up inside it, go lower. It's a beautiful thing, man, when you see it. It's a beautiful thing. Now you're just waiting for change in direction. Not trading, but I bet they hit data lows. What's data lows? This could be just returning into this breaker here. It's inside this guy, so anywhere up inside here, you want to see that stay open if you want to go lower. We're in a cam model 1 on a 5-minute chart. There's your consolidation. Return to the top of the consolidation. Go higher. I got nothing in here on a 1 minute right now. Other than look at the bodies here and run them back. This is also in the middle of a weekly fair value gap, new week opening gap. I think that's what that is underlying there. We're right back into the mean threshold of this last down close candle, holding price. And it's a breaker. It's this last run down below these lows. It's a swing point. It takes out old highs, lots of old highs. So we've come back into this breaker. It's mean threshold. And we're getting a reaction off of that. Now I want to see back inside this range. Let's get this out of here right now. We're hitting 50% right now. Just coming up into the range, and obviously 50% of that fair value gap. There. Do we trade through this now, start pushing higher, or we're using this as support? So just kind of watch these levels right here now where it's maxed out already. I like to see a return to this. Roll back down. How we work this fair value gap here now is important. But let's reverse on 30 seconds. Let's go to 30 seconds. See my buddy Hadi, what he said. Yes, my friend. Yes. Good for you. Right away, you caught it. Hadi, my friend, you are nailing it. And if you pulled your fib tool, you paid yourself half there. Take some off there, because if this reverses and comes through you and you were gunning for highs and didn't pay yourself, you'll kick yourself in the butt. Beautiful. Nice reversal, Hadi. Good work, man. I like the way your eyes are tuning in, my friend. I like the way you're doing it. I'm watching you, buddy. Good for you. Well done. And in case you didn't recognize what Hadi is talking about, Hadi has said, hey, look, Darren, do you see that gaping reversal? Reversal right through it, came back tippy-tappy right on my indicator. Don't worry about my blue dots, but lovely, lovely. And smash to 50%. Now you want to see, so if you're moving it this to half right now, you paid yourself half, move your stop loss to break even. So it's a no lose trade now. Now he pulls his fib tool from the high here to here and starts using the fib tool. I was telling my buddy about this yesterday. There's 62%. You pay yourself at 62%. It's also this fill of the fair value gap here. And then move the rest of your trade to 50%. You just got stopped out there. You're out of the trade in a 30-second range. Have a nice day. He's made maximum profits in a 30-second chart inside a small range. If that runs through there, that's fine. You wait for your setup on the opposing side to go higher. You want to see this fair value gap give way, because all you are is trading inside this thing. This does not give you a reversal. It just gives you a change in direction right now. Reversals won't be until we take out these old highs here. So it is reversing direction. You're correct. But for me, it's just a change in delivery right now. Just inside a small range. 62%. So optimum trade entry for a reverse could continue coming lower. Then you take that leg there and extend it down, and now you've got a possible projection on your leg. But we're still working in the first opening range, right? So Hadi had just pointed that out. He wasn't actually trading it because it's Friday. We watch on Fridays, unless you're absolutely sure what you're looking for and you know what you want to grab. Well done, Hadi. Felt like there is a lot more opportunity on 30 seconds and 15 seconds time frame. Sure, there could be. You'll see it'll occur on there first before it occurs on a 1 minute chart. Can you see why that fib tool works so well? If you don't know, if you're not strong in your PD arrays, a fib tool works great for unloading a position. So Hadi, if he got in here at 800, 878, he literally unloaded 10% of his, he unloaded 10% of his, or half his position at 857. So he's guaranteed half of his trade there. As soon as it hits 62%, he takes another 10% off at 78 handles, and then pulls the rest of his trade up to the 57. So he's guaranteed at least 57 with 10% extra up here. Now it's trading back against him. And now you see why my fib tool idea works lovely. If you're not looking for what's my upside objective, well, it's fair value gap. And then there's another one above you here. So you pay yourself here, 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 and here. And then obviously looking for the, that's a mitigation block. All those candles that don't take out that old high there. So you're looking for a run back up into here, which is a breaker that takes out these lows. So you don't want to see it reach all the way up into there if you could, but it doesn't. It just comes back, taps this old low. So if you don't know what you're looking for on this side, this fair value gap tool, sorry, this fib tool works great inside a small range for quick snipers, for dine and dash type of folks. So I hope my buddy Gary was watching that, because I was telling him about this yesterday. And he said it sounded complicated, but it's not. That's a quick way right there to make a small little chunk of change and be on the wrong side of the trade. If the trade continues going lower, you captured the retracement for a continuation on the downside. So want trade here. As soon as you see it trading below that level right there, which it did, trades back up inside it, continues back down. Here's your downside objective. Bang, done. Inside that small range there, right? So you could trade that up, a couple of trades down. So you've made a chunk of change there in a small 30-second chart. So good for you, Hadi. Well done, man. Let me get this out of here so it doesn't confuse us. And now take a price leg from here to here. And then from here to here. And then we go, what is down here on our chart that says what would be a nice little, ooh. So we'd say, let's run this out. This would be a nice place for it to end on the next price leg. And that was what level? That's 8.7, 18.7, 18.7 right there. So that takes all of this liquidity out here below the market. That's the next price leg. So that's my next downside objective from that price leg there. And we'll see if I'm close. And if we trade back through, keep your eyes on your fair value gaps. They will support, or this isn't a guarantee, by the way. It's not a straight run. Or maybe it is, I don't know. We're just keeping an eye on that level right here, right now. We must eat through here. Mean threshold. One more time. 50% of that wick, which is the bottom of that fair value gap here daily. And I want to see that start eating into this weekly fair value gap now. We're into the consequent encroachment of the weekly. Now I want to see that just start pushing through, start going lower. Um, 1 minute is supporting price higher. Where's 1 minute supporting price to go higher? I don't see that. It might have been a while ago you said that. Tertius Drayton. I see nothing to support price going higher. On the 1 minute, it was the 30-second chart. You could find that. Right now, we've got this little high taken. We've traded below it, back inside this, trade below that one, back up inside this one. See how we traded below it, back inside it again. Finally took out the low or the close. We're digging into the wick. We're through the 50% of the wick. So I want to see that keep coming lower now. So it's not supporting price for me to go higher. But again, I don't know when you made your comment. So you might have made it back up in here when it was running back into the range. Craig, I have never used the 30-second or 15-second charts. You said they work well at giving signals before the 1 minute. Maybe I need that feature. Craig, how many times have you seen me use a 15-second chart? If you can't find it here on a 1 minute, 5 minute, 15 minute, hourly, 15-second chart, then you're going to be saying, oh, I could do that on a 5-second chart, a 1-second chart. This is all fractal. If you need 15 seconds to think that's going to give you the edge, just my personal opinion is you don't. Yes, Michael uses it, but that does not mean that you all need a 15-second chart. You don't. I've been calling this for months on a 1 minute chart, and it works perfectly fine. And you can make a killing off of it on a 1 minute chart. So 30 seconds. Again, that's just going to help you say, when I'm expecting a reversal, you can get down into the 15-second charts, 30-second charts, just to confirm that you're really catching an optimum reversal. Like if that was coming down to the hourly and you were looking right there and you're going, if I see a reversal right there off the fill of that fair value gap, if I see one on a 15-second chart, I'm taking it and I'm going to come back up at least into the top of this here. It didn't. It just kept running all the way down. So you say, okay, well, what's it aim for? 25% of that wick would be great to see a reversal. So you pull 25% off there. You see it, if it hit it. Let me just pull that up there just so you can see if it hit it. And then you look on the 15-second chart. Oops. Just shy of 15 seconds. So as it's coming into that, that's when you look for, is there a reversal there? Go back to that 15-minute chart and see if you can see a reversal there when it pulled back all the way up into here. So when it went from 765 all the way back up here to 849, go back in your 30-second chart and do a review and see if you can find a reversal there that would have hauled you out a whole ton of pips. So when it hits here, you go, I don't see a reverse, don't see a reverse. Oh, I see a reversal. And then you see it, catch it and run it back up to then when it turned around here, where in this, when it closed and kept going higher, did you see a reversal up in here? So there's a technique you can use for catching a reversal and just keep playing it until you see the next reversal and then see if there's one up there. So just do your review on that and see if you can see it. Darren, what do you think about 1 hour fair value gap? Let's see that fair value gap can hold the price. This one here, is that what you're talking about? Or are we talking about the downside objective being right here? Right from here to here. If this closes below here to here. Oh, yep, right there. That's the area of interest for me. Area of interest. Ding, 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 ding. Have a nice day. Come on, hit my objective. Give me a little kiss. Give Daddy a kiss now. Come on in. Give us a kiss, love. Come on. And that is continued. That's finished off the price leg, right? And then you see this weekly new week opening gap right below you here. So I would like to see that continue to push through here. We've now taken the low out there. Yeah, good. Don't go that fast, man. Just study price action, and we're just giving you and study his concepts on his kids 2024 mentorship. I tell you, of all his mentorships, if I was starting again, this 2024 one, he's giving you guys his gold. He truly is. Just, I think he's just in such a great mood, and he wants to share it with his kid. He's dropping stuff that he never talked about when we were doing the mentorship, when we paid for it, back when we paid for it. He's not dropping nuggets like he is in this 2024 for Caleb. So you guys consider yourself extremely, extremely lucky. Don't take it for granted. I'm telling you, stay on him right now. He's trading live. He's probably doing a show right now. Let me see if he's doing a live show right now. Yes, he is. He's live right now. You should be following him, not me. He's the guy to be listening to, and he's doing it live, so he'll give you context and all that stuff. I just trade my method over and over again. I just look for my setups over and over again. So he's the guy you want to learn from. Now, the trade we gave you earlier this morning, this one here, oh goodness, we've had a beautiful trade. So that's been now how many? 960 all the way down to this little guy right here. That's 260 handles this morning. Almost. Just shy of 260 handles. 250 handles. Yeah. 250 handles. And that's on a non-farm payroll day. You don't trade, you just watch price. I must confess, I did nibble something out of there. I didn't get the whole range, but I did nibble some out of there. So even though this is my downside objective, that's my pay myself zone right there. So I missed that last little chunk. But that's the price leg you see. When you see this retracement, this is the fun thing. Hadi caught the reversal here on the 30-second chart on a trade reversal above 50% in the 62% range, paid himself, and then got back on track again below that level we talked about on the 30-second chart, and then continued to run it all the way down into this level. So you would have caught down, up, and down again. That's how good you can get this. He gets the rerun. Yeah, you're not going to learn a lot of techniques from me. All I've got is my setup, my way of doing setup that he's given us, and I look for it every minute, every hour that I'm in here. I'll look for that one setup, and I just want to learn how to read price action, right? So the purpose of this is not to kind of give you guys signals. It's just to kind of show you how can we stay on price action, how can we stay in the market. So what are we looking for here? We've run that low. That leg I would consider completed. I'm looking for right here now. You look for the SIBI. So ask yourself right now, while it's right here, what do you want to see? What do you want to see? Where do you want price to go? Where does it fail for you? If you're in this short right now, where would this trade end for you? Whether you're paid yourself out at portions and you have a small little portion left on, where does it fail for you? And you go, now it's changing direction. It's coming back against me. I close my trade and I start looking for something going long. Where's a change in direction? Where's a break in market structure for you? And where's your fail safe? So if you're trailing your stop loss, where would your stop loss be in that level? Say, if it hits this, and then it's definitely changed direction and I'm out of my short and I'm considering a long. You guys tell me. Another setup on the 30-second. That's done already. Yeah, there's the 30-second. Reverse here inside this range. You're hit the 62%, and now you've got the reverse again to keep coming lower. Now you're into this one, that one, and that one. Good for you, Hadi. I like it, man. You're catching the eye. Won't be long till you start teaching all your friends the same thing. So that you want to see this break now. You've got these two warring companions fighting each other. You've got that level and that level. You want to see that level get broken to the upside. And then we want to see this high get taken, use it for support, and then push higher for this range inside here. So Hadi, good eye, man. He's staying in that 30-second chart. And I'm going to go back to the 1-minute chart because I want to support people that are just staying in the one. So you keep an eye on that, Hadi. I like this. We're digging through this now. I like that for going higher. So well done, well done, well done. Okay, so now see, here's the difference. Here's the difference. 30 seconds, Hadi has seen it down here already. If you get in long right there for that high, you just taken in this chart 734 to 780. That's like 30, almost 50 handles. Is that right? 734 to 781. Yeah. You're right up inside the breaker again. 734 to 784. That's 50 handles. Right there. Just in 36, 190, 120. So there's like 2 minutes. You just made 50 handles in 2 minutes. And here's the support. You want to get a close above here, come back and find support off that, or this fair value gap in here. You want to find some support inside that. I'll start going higher. Versus the 1 minute. See, 1 minute, we want to see this close above this, find some support at it, and start pushing higher and get through here. We must get through this on the 1 minute chart to go higher. See how Hadi is already catching if you're a micro trader, like a super sniper, like really, really tight inside small ranges, and you stay on a 30-second chart and you snipe inside range, stay inside the little range, snipe out your portion of it and move to the sidelines. Because if this is reverses on you right now and slams through you, you again caught the reversal inside a small range using the fib tool. There's the fib tool. There's optimum trade entry reversal to slam back down if that's what is supported on the lower time frame in the 30-second chart. And if not, you're making a killing on it. And we're waiting. For us, we're waiting on a 1-minute chart. Hadis bagging and tagging buckets of cash down here already on a 30-second chart. Let's see, 5-minute people are waiting. Hourly people are waiting. 30-second people are cha-ching, cha-ching if you know what you're looking for. If you get really good at it and you start to see those lower levels and use your fib tool to scale out, don't get greedy. Just take your money, move to the sidelines, and wait for the next couple of minutes for something else to set itself up. But you got to get good at what you're doing before you get down to those level of charts. You owe me a lot. Well, send me a coffee, my friend. Send me a coffee. Whenever I come see you or we ever meet up in sometime in the world, you can buy me coffee. How's that? Seeing the Hadis, like, let's go back to the 30-second chart. So we never saw anything in here. See how it stayed low? The bodies stayed below that level. It's a short for us still, but Hadi was down in here and he's inside this range. So he pulls his fib tool from here to here and he starts running. His entry is right here. Watch, 50%, he moves to break even. So he's right here. He's in his trade. This does not come down to his trade. Then he moves up to 62%. So then he moves up to 50%. And then something goes boop and takes him out there. So he's got this lion's share. So he's got from here at 741 to 778. So there's 36 handles. Then it came down and he finally got everything else taken out at 65. So 38 to 65. So he's even snatched 30 handles out of that. He snatched money out of here. He snatched money out of here, all in the wrong direction. Now that takes cojones, balls of steel, my friend, balls of steel. And he did, if he's using the fib tool. Or if he's saying, I just wanted to come back and fill that fair value gap, hit this breaker and I'm good, I'm out. So as soon as you got in that trade, says, I like this range, I like this order block, I like these old lows, I like this low here, whatever he's aiming for, 50% would have just given you that old low. But if he's looking for that range, come back up to optimum trade entry reversal. There's the reverse, take that old high out. There's the 30-second reverse. He trades through it. You don't get an opportunity to get back on it. So look for this candle right here. As soon as the body trades below it, right there. Nope, right here. Trade back up into it. Nope, you don't even get that guy there. You don't even get that one there. So that was the reversal. So it would have taken out his stop loss if he'd done the traditional way, which is always put your stop loss below the reversal. So if he was looking to get short on that, you wouldn't be in short. You'd have to wait for the new setup, which is right in here. It trade below it and then trade back into it. So there's the reverse. Right. That's the 1 minute one I've got here. I'm going to show you this on the 30-second chart. Let me get that out of the way. Just so you can stay in sync with the market. So you say, well, how would I, if I was on the wrong side of that, how do I get back in sync? Well, when it trades below the fair value gap that initiated his run up, when it trades below it, it's extending the range. So it trades below it, comes back up. And do you get a chance to tap it? What's the high of that candle? 745, high 733, high is 734, 733, 733. Oh, there you go. Now you hit it, but you've already taken the low out. So you wait. The lows, that would have been your objective. So it's already been hit. You didn't get an opportunity to get back on. So he ran up this up. It came down, took out the lows, and he didn't get an opportunity to get in. So you wait. You wait. And look, 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 look. Look, do you see this, my friends? We finally hit the objective on the price leg. Now let's see it tear out of here. That's a level of precision and prediction that Michael does. But that's what he taught us. So what you're seeing is the same stuff Michael does. No, that sounds kind of arrogant. No, that's my lucky precision based on Michael's methods. I'm still nowhere near anything near his level. So let's go. Let's go. We got equal lows. We got relative equal highs. Let's wait for one to get taken out now and see where we go. Would you explain what you saw to the short on NQ top again, please? 930 top, London low, not taken. Oh, from the top. Okay, let's go from the top. Not on a 30-second. Let me go back to the 1 minute here. From up here is where you're talking about, Greg, from 930? Okay. So we have old highs. So we got a consolidation here, right? We have, I can show you multiple different entries here, but I'll show you the typical one that I show you guys every morning. Then I'll show you the CAM model entries. You have a old highs taken out before the 930 open, right? Highs are taken out. We create a fair value gap. We trade into it and we say, oh, look, it traded below it. Here's an opportunity to run for this low, this low, this low, this low. So, and this fair value gap and inside this range here. And your eye looks at the range that you're in, whether it be a small one, bigger one, larger one, large, all the way down into here. And what I do is I go, where's the nearest SIBI that is reverse or opposite to the BISI I just can get in on? Okay. If I was aiming for a downside objective, where is a SIBI inside the range I'm in that I could be gunning for? So you got this one here and this one right here. There's nothing else in between here. Right there, see? So I'd look for an objective there. So if you ran, see how it's already hit it here? It ran up, tapped it, and then ran all the way down inside it here. Then it ran all the way up to the top of it again. So if you're super quick, you'll say, I'm going to trade from here to there. If it comes back in there, I'll take it again to run for lows. If the lows haven't been taken, then I'll run for the lows. That will be my reverse that I'm looking for. That's going to key off of until I have a body that trades above it. I'm going to keep using it to go lower. If it keeps returning into it, I'll keep using it to go lower. Hit my objective. If it comes back up, I'll take it again, run for my low. If it trades above me, comes back, taps me out, break even, I'll get in sync, go back up the other way. So if it comes back up to here, inside that fair value gap, inside this fair value gap, they're overlapping. It hits it. You see how this low is taken here? So you look at this and say, are we going to go above that and use that for support to go higher? Or are we looking for this swing, taking out these highs to go lower? So we've taken out that low. So now you go, ooh, this could be one of those, I'm reversing this way or I'm reversing to go up. So time of day, what do I expect? You've just run out these highs here. It comes back, finds support. You drop down below. You're through this guy now. So you say, where's my next one? Nothing, 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 nothing. Nothing, nothing, nothing. There's nothing down here. And I see over here, I see one here. And I go, draw my little box out here. And then yes, we cut through candles. And look at that. That's your downside objective. From there, and that's what I look for. Every single time I look for this, and then I look for the next one inside the larger range. And if there isn't one, I'm hoping that we're just going to gun through a breaker. And those are the things you kind of look for. So you're still paying yourself on the way down below these old lows. You know, you're not just gunning for that as with all your money in and never taking anything out. You're pulling your fib tool from here to here, doing the 50% on the way down if you want, or you're looking for the breaker, looking for old lows, whatever your method is for getting in or out of the chart. There's as many methods for managing your trade as there is to get into a trade. And then you got fail safes and that as well. It can get really complicated. But anyway, let's get back to this. So that would be another objective I'd be looking for. And it hit it. And then all of a sudden you have that. Once it's hit that, then I'm looking for a reversal. So go down to your 30-second chart right here and see if there's a reversal there. Because we went from premium array to discount array inside a larger range. We hit it. And is there a reversal there? Okay, let's do it. What the hell? 30-second chart. Let's go to 940 and see if we see a reversal. 940 right here. Oh, look at dang. Dang. Do you see that reversal right there? Look at right on the money. Pull your fib tool from here to here. Run back up. Oh, we did this one. This was the one we did with Hadi. Okay, so there's your reversal. You hit it. You got this one here. There's nothing up there. Watch this one. We trade below it, trade back inside it, continue on the downside. Reversal. Hadi caught this one under the reversal on the way back up. Inside this range, small little range, swing point, swing point. Catch yourself. So hopefully you understand what it was, what I look for anyway. And if you clear this one out on the downside, you go, where's the next one? There's one down here. Now you're getting into the consolidation. But there's one down here. Let's take this one and see where this one takes us. Oh, look at that. One more time. Pating, hit it, and then went all the way back up. Look right there. Was there a reversal on the 90s at 41 seconds? Or in the 30-second chart? Let's do a 15-second chart. Right there. 15 seconds hits our spot. And there's nothing. Oh, right there. That little tiny gap in here. And it came back. Look at that. Right in there. Do you see it? Tell me that on a 15-second chart, look at the precision of that little tiny fair value gap there. Tell me somebody in a boardroom stopped orders, or there was one more guy came running in through the door saying, wait, 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 I want to buy. Hold up, wait for this guy. He gives the order. Okay, now we've got enough volume. We can move in that direction. Bullshit. Algorithmic, my friends, right to a 15-second chart. That's a level of precision. The algorithm, you cannot tell me that that was just the exact order we needed to finish that little tiny piece there to retrace to continue back up. Nope, you won't convince me. Anyway, have I gone off topic? Sorry, Craig. Sorry, buddy. Sorry, man. Did that? I know I was very verbose there. I was full of words. Still afraid to trade NFP. It's okay. This is a study in price action. Look, there's a ton of handles here this morning. There's a ton of handles. After NFP is done and the markets can get themselves back in sync again, you can trade a Friday, but you never want to trade on, like you see some heroes think that they're going to trade this 200 handle run and catch the right side of it. But if you're short there and then all of a sudden it ripped back against you and just cleaned out your, especially if you're over leveraged, and there's idiots out there that think they're going to trade that. Why? Wait for it to settle out. Wait for the 9:30 to 10 o'clock run to settle itself out. There's your regular trading hours. It got back right to 50% of it and then continue going lower. You see a consolidation. Here's another CAM model entry for you. This is a CAM model 1, 2, or 3. Okay, CAM model 1, 2, or 3. Here's how it works. You guys are getting lots of fun stuff today. Right here. That's the consolidate. I consider a consolidation, and that's a manipulation leg that takes out the high. The manipulation, and then the displacement back down again. So your CAM model 1 is from the wicks low to the bodies. That's 1. CAM model 2 is 50% of that, which is right there. See that dotted line? That's 50% of it. That's CAM model 2. CAM model 3 is the leg that takes out the highs. Now, you go from the leg that takes the high here. That's the one that takes the high. There's a swing here. So you take that leg that takes the high. You take 50% of that leg. And that's where you want to see it trade to and leave. So look, watch this. There's 50% of the leg. Bang, hits it. That's a CAM model 3. Oh, sorry. No. Sorry, let me move it up here. That's the leg. And that's the, I've got, it's been a while since I did CAM 3 right here. You have to take it from the bottom to the leg that takes out the high. Then you use the midpoint, which is right here. Sorry, I was doing that wrong. And that's your 50%. Take it from the bottom of the fair value gap to the top of the manipulation leg, and 50% of that. That's your CAM 3. So 1, 2, or 3 would have been just delicious for you to continue going down. I'm trying to think if there's a no. And again, you just look on the videos in my channel, you'll see a consolidation attack model. You have 3 different entries in that. Hans has been waiting for that London low to get taken. There you go, buddy. Done and dusted. I'm gonna get all these guys out of my way here. So does that make sense to you, Craig? Anybody else have any questions with that? I'd like to know how Michael explained that. If he got the same thing I was looking at, or if he explained it the same way. Morning, Larston. How you doing, buddy? Are you still on vacation, taking it easy? I went by the fire hall in Canmore the other day. See my buddies. Man, they got a brand new fire hall out there. It is a sexy fire hall, let me tell you. It's amazing. Really, really nice. I look at the tourism they got out there now and how busy it is and how the town is restricted road access and you got to pay everywhere. You cannot go into that town without having to pay. They get their hands in your pockets the moment you come into the town. It's very unfriendly to tourists. It's like you can't park anywhere without someone looking for some money. And then they want your money when you go into the town. It's crazy how, I don't know if it's COVID or just everybody's in this big cash grab now. But it's sad to see a small town like that just gouge as much as they can. I suppose if you got lots of people coming, you need to make money. That is not regular trading hours. I don't know why that must be that's it's not set up properly. So now what I'm looking for is now that we've taken out the morning, we've created a low this morning. We have a weekly fair value gap or weekly. Ooh, I'm gonna do it. I'm gonna do it. I'm gonna do it. What am I doing? What did I just line up there? This is something new I've just learned. I don't know if I've learned it well, but it's something I wanna see. Anyway, this is the new week opening gap below you, draw on liquidity. So I would expect price to run into here today. It's a new day opening gap here. Or is this, no, this is an old, yeah, I'd expect to see it get down into here somewhere today. 18603. Your firewall's ugly. Till November. You're off until November? Oh man, that's a good vacation. I'm off to Thailand in a couple of weeks. Going there for 3 weeks. That'll be fun. Oh, there we go. Just hit my another objective, closed out a portion here. if we get into that weekly fair value gap some more. I love the way using looking at what Hadi did today, running down, especially if you have a downside objective and you get these little retracements back to optimum trade entries and you catch them on a 30-second, you're literally going down, back up, and you're catching all the handles out of there you can. So if somebody says, well, I got in here, got out here, I got 200 pips, you say, yeah, I got 300 pips. How'd you do that? Or handles. Well, I just caught all the retracements as well. That's when you're bold as brass, my friends. Bold as brass. Craig, when you look back on your MBA, did they ever, in your whole MBA, did they ever talk about charts? Did they ever talk about chart analysis using, like, was that part of your MBA? I'd be interested to know. I always wonder what's in a master's in business administration. I guess that's a lot to do with how you manage and run a business. But I often wonder, do they teach you stuff about how to manage stocks, stock market, market analysis, and how do they go about doing it? Is it very technical? And you have to understand a whole bunch of fundamental principles, and have any of these fundamental principles been an area of interest for us? See how we've hit that weekly? Look for the reversal right here. I want to see that market structure break, change in direction. We'll see where that sits in 30 seconds. You're inside a very small range now, so you're already past the 50% of it and into 50% of that wick right here. So watch. Do we just come back to 50% of the wick and continue going lower? When the ranges get really small, you really got to be careful about how you use these inversions and say, oh, it's going. It's like, wait a second, you're inside the range. You've hit the 50% of that range. And you go, well, that failed there and it didn't work. You didn't go back higher. You're inside a little tiny range right now. And now that's above it. So for me, I want to get, because this is so close, I want to see that upside get taken and use this candle here as support to get back into a larger range. And are you doing the same thing I told you up here? Are you doing the same thing down here for the reverse direction? Because now we're hitting the time of day where you expect to see what? Random walk is big. 5 minutes. It's the lie. It's the lie they teach you. So now we come back right there. We just tippy tappy. Now you want to see that start climbing out of there. Remember, all we've got is a change in direction at this point. This could be your bull trap if you don't take out that high. When they're that close, wait for the high. See how we're trading below it now? Bull trap. That means you can't use every fair value gap that now trades through it and becomes an inversion. you got to look at the range that you're in. Well, you've already fulfilled your greater than 50%. Watch, let me stretch this out so you can see the idea which I'm talking about. So you have to be able to identify whether or not this is a bull trap or a bear trap. Okay. So we said right here was a fair value gap reversal. You see the body trades above it right here, right there. But look where it trades to, 62% of the range, right? Inside this small little range it's in already, back into the order block, and 50% of the wick right here. See that? Right on that 50% of the wick. And then all of a sudden it starts to trade back down. And you go, okay, now does it tap it and go? You want to see it leave. And if it starts to trade into it again, you go, no, through the mean threshold of that candle. Now we're on the wrong side of this. It ran through and would have taken your stop. So when the range is that tiny, you just go, wait, till you see a break in structure to support this. Because we still have an event horizon down here and another weekly fair value gap below us. So I want to see it come back to here and continue going lower. That's what I call a bull trap. And you'll see a bear trap the same way. And that took us lots of hits to realize what the hell those things were. Because you're like, wait a second, it failed. Why did it fail? Because you're in the small range. It's already done its retracement back inside this range and continues going lower. That's the trap. You got to get above it. That's why I prefer to have one here and one here inside the range. That way you have a fair value gap here and fair value gap here, a discount and a premium. If you get above your premium, you're going higher. If you get below your discount, you're going lower. And if you've only got one, then you better wait for the high to get taken, because there's nothing to confirm that you could be caught in a little bear trap there or bull trap. And look, the event horizon has appeared in big yellow arrow. Now I'm looking for a reversal at the event horizon. Funny how this indicator finally came in and put the arrow in there. I was pointing it out here, and then all of a sudden it went, ooh, there's an event horizon. Then it put it in there right in the same spot I did. At least we're on the same page. $11 news is coming. Bought the puke in oil. You bought this or sold it? Oh, what level did we say we'd find support at? Look at that. And I can see how ICT can get like super confident. You start to go, man, if you're studying price action, this is what you should see. Like when you start to call levels, and then we called this and this, look at that, right on the money and right to the money, and then the reverse. My friends, I don't know if you find that valuable or not, but that's a level of precision you're not going to find every day. Let's say we get all the way back up here now. You have to toot your own horn every once in a while. It's got to feel good. Look at that, right to our level. So look for your reversal. When it gets to that level, that mean threshold, look for the reverse. So wait until you see a body trade below this level right here. There to there. Body trades below it. So watch. Body trades below it. Here, you don't get an opportunity to get on it there. So if it trades below this here, and then it trades below that little bearish order block and trades back into it, that would be my next level. So it closed below it right there. Doesn't give you an opportunity to get in on it. Look for this level right here, because we just keep trading lower. So I look for the next one, next one, next one, next one. and then this big order block here. So then you say, well, I want to see a break in structure. I'm not sure. I'm going to wait for a break in structure. When I see a break in structure here, and if we return to this break in structure after, then I'll be convinced that that was the high, not this. That's fine. If you're really keen, you get in on it there, which is a return into this order block here. Or you say, I'm going to wait for that market structure break, a body below there, which is right here. Body trades below it. And then what happens? We trade back into it right there. And look, this is what Michael's been pointing out. And it's so sexy when you see it. It's so sexy when you see it. I'm going to show you. I'm going to show you. Watch. We're going to use equilibrium. Watch the 50% mark there. Look at this. 50% of the wick left. Through inside the fair value gap right here. And 50% of the wick. Bing, bing, and hits it. I hope he's talking about that. I hope he's talking about that this morning, because he has mentioned this many, many times in his little lectures. And this is just it's not some random repeat of his methods. I'm telling you, he's been teaching this lately, and this is the thing I've picked up off his recent videos. Look at that. That is like a level of precision you ain't gonna find anywhere else, my friends. Like, jeepers creepers. Come on. Come on. Isn't that exciting? So once we break this low, you want to see it come back to 50% of that wick and book her out of there anywhere inside that candle. If it's a wick, I want 50% of the candle, or I want 50% of the wick. The wick is all you see here. There is no real candle there. It's all wick. So look at that, 50%. How beautiful is that? Look at that right off of there. Trades through it, 50% of the wick. It comes back one more time, hits it off this low, and then continues going lower. People. And if you caught that, like right there on the money, you had zero drawdown at 10.10. And look at my blue dot. Does that tell you something? I'll tell you about my blue dots. If you were in my earlier videos, you understand what my blue dots are. Beautiful is that? Oh, sorry, I'm having a moment. So anyway, from that perfect area, 69.9 to 68. That's, I don't know, if you put one handle on that, that's $1,000. I don't know how many handles you put on that, Craig, but oh, you bought it. Oh, you bought it. Sorry, here I am bragging about how great that trade was, and you bought it. Sorry, buddy. But that was the upside objective. We want to see that get hit and then peel away. And you look for the reversal, and that's where you found the reversal there. Anyway, sorry about that. Sorry to hear that, my friend. So we're into the event horizon. We froze, came back up. Now we'll see if this just creates a wick, and we'll see where these bodies end up here on the 15-minute now. If we wick down into here, we'll see where and it wicks back and closes on that event horizon. Then I'm looking for a reversal. If I don't get it, I'll look here for a reversal. And if I don't get it, I'll look here for a reversal. Or I'll split this up into quarters, and I'll look for the quarter, look for a reversal, look for the cross-cut encroachment, look for a reversal. And just keep, now you look for a retracement back into TGIF Fridays, my friends. TGIF Fridays. That could be an afternoon of deliciousness. An afternoon of delicious fun. And 11 o'clock is coming. So what do we get at 11 o'clock? We get a retracement. I'm expecting to see a retracement. So I want to see a reversal. Hang on a second. I just heard it. Honey, are you all right? Okay, I just heard a bang, so I'm gonna make sure you're okay. She's all right. So higher time frames, looking at higher time frames here and waiting for my setup. That little reverse to start happening. Get confirmation. And we'll see if we can catch a ride on the way on back. And it's only 8:50. I'm with you for another hour and 10 minutes. Darren, one fair value gap of the day is 18,900 in NQ. 18,900, my friend. 18,900. 18,900. Oh, this fair value gap way up there. 18,900. That's the fair value gap of the day. %. That's probably 75% of it right here. We're driving down to the next one. One trade, small crude. It's small and crude is cheap. Hitting key swing 68.24. A little early. So when you're watching these candles here, what are you looking for? What are you looking at? What are you anticipating? What kind of candles do I want to see in the future? If you're following the price action, you want to say, all right, we've hit a level at 52. I'd like to see that come down to 55. And 58. We'll see what 55, 58 minutes. Keep an eye on 55, 58. Let's see that tap in here. It's the commodic trader in me buying a cheap asset to hold. Yeah. I still have a lot of natural gas. This was our downside objective in gold. We came all the way back up through that candle into this fair value gap here. The top back into this breaker. I wanted to see 50% of the wick. We wick through it. And now we're looking to run back down. So big run in gold today, up and down. The last hour at least. So I'm looking at this as my downside objective for gold. These equal lows. This fair value gap right here. That would finish off the rest of this fair value gap season or session open from yesterday. All potential downside objectives. Session opens, so powerful, man. Look at them. Returns back to them. Bang, away. Banging around on them, and then get away from them. I tell you, session opens are big. Working them. You don't even get an opportunity on that one. There's so many key levels that are sensitive. That's gold anyway. Let's look at oil again. Man, oil's been on a nice slide today. You could have made a killing in oil today. Oh, remember we kept going. You want to see this thing go higher or lower? We went through the gap. We came back up to an area of equal lows. And look at that, just slamming down. The surgical instruments. Looking for lower lows now. Where am I going? Where am I going to put my box? I'm going to put my box right here. My area of interest is going to be somewhere around here. As a downside objective. So again, you're paying yourself at these equal lows you got right here. Order block. You want to see that order blocks mean threshold give way. That's where I'm aiming for on the downside for that one. Not that I'd actually be buying it or anything. Nobody else gave me any stocks they wanted me to look at this morning. Natural gas, you said? Power grid, that's over here. We've hit our objective we were looking for in the week. This is where I was looking for the natural gas this week, and we've just hit it now. We're definitely inside it. Now, how we act inside here, you want to see this level in natural gas give way. Oh, damn it, just make it bigger. I don't know why I wrestle with that every time. I want to see it get on top of that box. On top of the box. This is the daily, right? I want to see it get on top of that box and get out of there. If it not, we'll get another retracement back inside the range again. And then I'll have an area of interest down here somewhere. But right now, I don't want these equal lows. I want these equal lows to hold now and continue pushing higher and take out these equal highs first. Get some leverage, go higher. Because I'm in this one, I obviously want to see it go higher. Natural gas has found that support that we're looking for. If you're looking at natural gas, I was talking about US gas. Natural gas, you're looking for these old highs to get taken. And I don't think it's taking it. What's the high on that candle? 305. And this one is 304. So we've taken that high already. My next objective would be that level right there. What is that? 313. What we just saw in oil, right there, I'm looking for right there. 313. See what kind of reaction you get off that. If we close above this today, changes my whole perspective. But we got to close above that high with a bold candle through the mean threshold of that candle. Then I can give you a whole new different setup. Otherwise, this is a found support and we're looking for the highs. It's taken today. For the last 2 days, you've made from the opening at 215 to 305. 305, yeah. All my special alarms going off. All right, so we've got, so that was your play. I gave you that one earlier, and that's the high. You pay yourself there. You would have paid yourself a rejection block, but if you pay yourself up there at 305, great. If you're getting too greedy and running too high, then you're skipping out on objectives, because look at this chopping back and forth. So we could chop back into here and you'll be kicking yourself for not taking profits above that high or at the high. Move your stop loss past break even, move it into an area of I don't want to see it get back into this order block here. It could re-engage this order block one more time and then go higher. So I'll put my stop loss under here. If it does retest it, you can get back in long again. But I want a discount. This area is way too juicy and way too many equal lows down here. But now that you've taken those highs, we'll create relative equal highs here. Just run up, take out all the liquidity up there by 1 penny. And if it returns all the way back here, you'll kick yourself for missing out on it. For the last, you had a whole day of running it back up. Sell your stop, wait. If it closes above, comes back, finds support, you're not too far off of your original exit to get back in for another long. Ooh. Look at that, right off the old one. As I was yakking away, I missed the opportunity to get in on nothing. Let's get into well, that's a 15-minute. Oops. This is a 15-minute. This is a 1 minute. Let's see a 30-second chart. Nothing. Order block, swing point, nothing. Took out the old highs there. So now we're just going to quickly review if there was an opportunity for you to get in on anything. There's a swing point. If you look at that, I don't look at that as a quick displacement candle. Fair value gap. Do we come back inside that fair value gap? Right there. One opportunity to get in long there off of this. Using our method, nothing. Taking out, breaking market structure to the upside. You know, you still don't get in on that. We didn't get a chance to get in even on 30-second. What is a 15-second chart? Ooh, look at that little small guy there. You don't get it. Look for this right there. You still don't get it right there either. Doesn't give you here, even on a 15-second chart. Let's go to 5 seconds and see what would have happened. Is this it here? This is 5-second chart. Here's 5 seconds. So there's your bottoming out here. Fair value gap. Finally run above it here. And you come back and tap it right there. 5-second chart. And we're finally gone. Or CAM model 1. Here's your consolidation. Run above. Come back. Find support at it. Inside your consolidation. CAM model 1 on a 5-second chart. Let's get back over to reality here. Now we're looking for it to run back into here. Looking for this. I want a discount inside here. And look at that, 11 o'clock. Remember I said 58, 55 to 58. There's 55, there's 58 right there. Boom. Is there something specific about my times? 55, 58. Look at that O2. Oh my goodness. How lovely is that? Where are we at? Wait for a discount. That's the first one. Fair value gap. Watch it. How about CRWD? Huge buy volume NQES, no warning. Trade retracement? Yes. That's the retracement. And I want to see us get back into the only discount one I can see is this big fella right here. A nice fill if it leaves that last little portion open. I'm not touching this, even though it's coming back into a nice discount now to go higher. My setup's not there, so I'm gonna leave it out. Now, this low is another, look at that, on the one over here on the 15-minute chart, it retraced all the way back up to the top of that fair value gap and then snapped back off of it. So if we see this dig down even deeper into here, I want to see this low get taken out for lunch. And then a reverse. 11:30. Whatever low, if this low remains at 11:30, we're going to gun for that, according to Michael's new teachings. Sorry, let me put on CRWD. CRWD. This CrowdStrike Holdings, is that what you're looking for? Interesting. It's a nice steady climb, hey? Okay, so daily, let's look at the daily. After taking out this high, what do we got here? A gap. Draw out your gaps. These are going to play important roles for you later. Who's in this? Campion? Is that what you're asking? Campion, yeah. So that's a price gap. It's like it's not a volume imbalance, it's actually a gap. And I don't have a gap in here, so we'll call it a price imbalance for the sake of a better word. It's definitely traded through it. Nothing. Yeah, it went a quick. You couldn't have even, the moment it traded below that, it didn't give you an opportunity. As soon as it's taking out this breaker right here, you could pretty much panic on that. Once it took that low out, it ran back over $100. That's a panicked situation right there, because you have no opportunity to get in off of the reverse. You'd have to, oh, wait a second. You've got this right here. Okay, sorry, let me show you here. This is when you got to really take some time to study the markets that you're in. You've got this little imbalance right here. And you got this little fair value gap right here. Watch this. See how this, we trade above it, come back inside it, and go for the highs. They're taken. Now, if we trade back through them, we're changing direction. Change direction. You get one opportunity off the equilibrium or the mean threshold, sorry, the consequent encroachment, to go lower. That's the only thing you'll see right there. And it's not a BISI, you see, it's a SIBI that fails to go higher. Right? It's no different than if we were looking for this to support price. When it doesn't support price, it means it's going to come back into the range. So here, whether that's a SIBI or a BISI, you're looking for it to provide support. It does. It trades above it right here. You trade back into it. You're looking for those highs. It trades back. Again, doesn't close below it. Finally takes the highs there. And then, so you pay yourself there. It trades back through you and literally right through you. Your stop loss is sitting right here. It comes back and takes your stop. Or if you paid yourself and moved yourself to break even, then you're well, I guess what depends on whatever your management style is. But let's say you got in here for the ultimate long. So you got that, it put you in here. It traded above you, went great. I want this, and it came back, took you in, your stop loss is sitting here. It ran back up, took those highs out, and then you moved to break even. Came back, took you out, and you went, oh, okay. Now it, oops, actually closed. Let me put that back there. It actually closed below me. Trade back up. If it trades back into me, I can get short off of that because now I'm on the opposite side of it. Here, you get an opportunity to get short right there or at the consequent encroachment. You may have said, no, I want the best one right here. The one that you took to go up is the one you want to go down, and you never would have got it. That's why I give you those 3 different entries: the bottom, the consequent encroachment, and the high of that fair value gap inversion. So that's your short right in there when you're looking at that. You don't even get an opportunity to catch that swing return to. Now here, we've got this reversal here. And you got to think larger range now. I'm looking from here to here. There's 50%. We're coming back inside this order block. So reverse right here. Body trades above it. Right there. You open above it, trade back into it. You'd have to be watching it that day for the catch this reverse. Opens, trades back into it, and left inside that range, or from that range there to there. You're looking for 50%. It hasn't hit 50%. It's got above here. It's coming back inside that. I wouldn't want to see any degradation. So you've got this high taken, you've got this imbalance right here. You traded below the imbalance. You want to see it start to trade back up into it to get short, back inside this range. And you're looking for this level to get re-engaged one more time now. That would be the premium. That would be the discount inside this range. So you're coming to almost 50% of that range now. So I wouldn't touch this stock right now. I'd wait, because you got a reversal coming back into the range, and then you want to see if this is going to hold price. If that comes down, bounces around in there for a bit, comes up, find support at it, look for that range above you again. If you can get through that, then you're looking back up into that larger range. Right now you're inside this one. Reverse, reverse, premium, discount. You're looking for this level here. This would be nice to see this hold. Yeah, I wouldn't touch it right now. But you'd have to have really been on the ball to catch that. The signal that, guess what, we're going lower. And boy, did it ever gap down. That's a $200 drop. That's a half the stock is gone over the course of July into August. Reverse, coming back inside the range again. We haven't hit 50% of that range yet. Look for this order block. It's come back to the low, an old low right here. Reacted off that, created a reversal. You didn't get an opportunity to get in on it. You want to see it trade below this level. It did. It actually, like it did here, it opened above the gap. It opened below this order block right here, traded back into it, and then closed again below it, and you didn't get an opportunity to get back in on it again here with this candle. So to me, it's got more downside. I'm looking for in here now. If that was my analysis of that guy. Oh, good. Look, there's the discount we're looking for. Nice. Now I want to see it get out of here. That's a pretty jumpy stock you got there, Champion. It does a lot of gapping up and gapping down, and $200 drop in a month. Wow. If you were shorting that thing back in the beginning of July, and you would have seen that little high that we pointed out, or that reversal, man, oh man, you could have really shorted the crap out of that and made some cash. Hmm. 15 minutes. Watch this low. It's going to get taken now. Oh, we got this one as well. Hanging right on the event horizon, hey? See, Lauriston, yeah, I don't blame you, man. That was an awesome rundown today. Have an awesome vacation, my friend. Enjoy your time. Does the algo drive CRWD to extreme high levels? Remember when we were pointing for this price leg down and we are aiming for a specific, not that one, but the other one that was looking for the price leg. So now we've taken out those lows. I get a feeling this, whatever lows created here, they're going to take that one more time. See, this is where it did not break that market structure for me for the upside. And there's that fair value gap here, and you want to see the structure break. If it just keeps driving through this one, and this, you want to see it drive through on a close above that. It did not. Quickly reversed. It did take the highs with a wick. So now this big monster here becomes the reversal to get back in sync with the market again. I'll answer your question in a second here. I think I can answer your question. And those who are ICT traders, if you can answer his question as well, if I don't give a good enough answer, by all means, you can check with any other ICT guys, and they will give you their interpretation, I'm sure. So here's how I think. So you said, does the algorithm push markets higher? Well, we all think that the algorithm's set for, remember when I talked about this price leg coming down and I wanted to see it reach for the next price leg down? It sets for itself objectives. Once it goes back and collects data from previous points that it reaches for, the algorithm sets new parameters it wants to reach for to offer price at higher or lower levels, and buyers and all that get in. So I think it's just a matter of it repricing to its next data point, whatever that might be. And I showed you an example of that this morning when we said, okay, here's the next price leg down. Is there an objective that it's aiming for back here? So that was the little drive down. There was a fair value gap or something over on the other side. I can't remember which one I was talking about. Was it oil? I remember I drew a line and I can't remember which one it was. But as it creates the next price leg down, you want to go, okay, so if I'm anticipating the next price leg down, what is sitting down here that is a data point that algorithm wants to reach for? Now let's say it's a brand new high, it's a stock that's never been there before, then you have to look at it as a projection. I had on one of my charts, I think it was this one, Stand by. No, damn it. Oh, wait. Hopefully I saved it. Wow, is that ever getting messy now? Let me see if I can pull it up on here. Keep your eye on the 50% of that retracement now. There. And see what kind of reaction you get off of that. And whether or not you continue to eat through it. So this, pull your fib tool in here and you'll be trading that on the way down, shorting that. Stop. Shorting it anyway. Let me just pull this one up in here. NQ. No futures, just NQ futures. Did I have it in here? I'm going to show you right here, Craig, on a daily chart and a weekly chart. See it? Well, I'm just waiting for my video to catch up. I see there's a delay behind us here. You see that price leg there? And then this next price leg up. This is a weekly chart. This is 2020. It ran back up. And look at this. I'm just going to continue to dazzle and amaze you and make you ask questions about algorithmic trading. Ask yourself, with all the news, all the shit that went on in the markets, all the fundamental crap they teach you in school, all the fundamentalists out there that hover around the talking heads and all the news people, if that price leg there and a retracement back into this range of optimum trade entry, 62%, and then the next price leg starts, which is the same as this price leg, look where it hit. And now we're getting a reaction off of that. So if you're saying it's making new highs, how do I know what it's projecting to? Look at that, just a slow, steady run up. Always making new highs, making new highs, making new highs, making new highs. Retraces, and then finally books it up for another new big, huge price leg. And then how do you set another new set of highs? Constantly setting new data points. So if this was a continuous drive up with no significant retracements, then all of a sudden we get a big retracement back here in 2021. 2022, we have this, and that's not even COVID, right? That's not even COVID. So 2022, we get this big retracement back into this range. And if you look at your range, you'd say on a weekly chart, if this was a 1 minute chart, you'd be like, yeah, well, this makes sense. Okay, let's go down into right here. Let's find the reversal. So if you're looking for a retracement back in here and you say, as soon as it hits 50% or more, I'm looking for a retracement. So here's our 50%. Hits it right here. We dip below it. We get a retracement right here. Body trades above it. And we're back inside this range. $62%. Strange how that 62% keeps popping up, hey? 62% retracement. Then it peels back and we see another reversal. Body trades out about below it, back up inside it. We're inside this range now. We trade through that one little level we're looking for, the discount array, the premium array, discount array. You trade through it on the downside, come back up inside it, tippy tappy, extend the range. Go lower. Now we've got a new range. This is a weekly chart. Same kind of shit, right? If Michael teaches you on a we've done this down to a 5-second chart today, by the way. We're in a 1 week chart now. So you can see how once you catch that reverse, now you wait for a new reversal to happen now that we've taken out this low. And there might be one small one in here. I'm not sure if there's a small, yeah, there looks like a tiny little one in there. You trade above, run back up into this range because it's a swing point. And you pull the fib tool from here to here and you'll see the same kind of thing again. And you wait and see how it's compressing now. Wait for a breakout. It's hit 62%. You go, ooh, that's awesome. As soon as it hits 62, wait for another new reversal. And here's a new reversal right there to there. Trades above it, comes back in, tippy tappy, taps it right there. And now we get a continuation. We extend the range. We have a reversal. Now that we've taken out that high, did it take it out on a close? Nope. It didn't. Came back, tapped it, and extended the range higher. So we look for, is there a premium one above here? We've already hit this. There's a fair value gap to fill here. It fills it right there. Waffle around a little bit, find support off this old high, and continues to push the range higher. So now you start to go, once it breaks market structure to the upside, then I start to go, is there a new price leg starting here? If it takes out this high, do we get a chance to get back to it? Closes above it right here, taps it right there. Did I show you this on the 1 minute chart? Hell yeah, right there. There's your continuation on the upside. Wait for the leg to finish off. And you're in this trade for what? How many more years now? A run back up there. If you do the reversal again, there's a small reversal here. Now we've taken out this high and this high. Oh, sorry, this high right here. You're back inside. I draw that one out there. That's the premium array. Inside this larger range, that one. Draw it out. Look where the lines, I'll line it up for you. See? Hits it. Rejects off of it. Just say, okay. I'm back inside this range here again now. It trades below it. It trades below it right here. Trades back into it right there for a short. I'm telling you, this thing is over and over again, Greg. We hit our, finally, look at that right there. That's the close of the price leg. And we just ran above it and we've turned around. Anyway, I hope you understand what it is we're kind of looking for there. So we've taken out that low. Good. Does that help you? That's when you know it's algorithmic. When I can show you just a simple, my setup pattern for a reversal. I can show you that on a 5-second chart today, 30-second, 15-second. We showed it to you on all those time frames, 1 minute, 1 hour, a daily. And then I just showed you again on a weekly chart for years, for mega trades, right? That's your opportunity. And now you do that in your stocks. Just the simple setup that I've showed you that we practice every day. Look at your stock. Go back through your stock market. Don't believe me, man. Go back through your stock. Pick one, and I'll go over it for you. Pick a stock, and we'll go back over and show you this simple setup that occurs. Do you have the patience to trade it? Do you have the trust to trade it? It's hard for you to believe it. That's okay. That's okay. Look at it. We'll do that on a 1 month. Do you want me to do it on a 1 month chart? You can do it on a month chart. Doesn't matter. Any chart you can do that on. It's fractal. If you cannot prove your theory out on every time frame, it's bullshit. I've seen this way too many times. People trying to customize. Well, it works really good on a 5 minute, not so good on a 15, but it really works great in a 5 minute. Then it's not a fractal method that you got. If you can't prove it out on all time frames, to me, that's just my own belief. It's not true. It's not algorithmic. But that's just me. And I'm sure it's Michael as well. We took out that low. That's what we're expecting. I want to see this reversal here now, because we are at, what time is it? 31. We may get one more run below here or here. There's a consequent encroachment of the weekly fair value gap. If we get a play off of that in the next few minutes, if we get a lunch hour run down into here, and then you get a play off of that, look for your reversal. Come back up, hit this guy. See, we're between here and here now. We're hitting it, coming lower. We're looking for this to trade above it to get higher, back inside this range. So you got one that goes lower, one that goes higher. Premium discount inside this range. And the premium portion of this one is not until you get over the consequent encroachment of it. So they're so close. This is like premium and discount range. Like if you see me pull my fib tool from here to here, look at that. A big chunk of it is still in the discount zone. Wait for something clean. Never force your trade. It's Friday. You don't want to take losses now and go into your weekend with a hit after having a beautiful setups throughout the day to watch. So what? We didn't make any money today. If you did, that's what you want to hold on to. Whatever little bit of profits. I didn't grab a lot today, but I'm not going to take any more losses. I'm just going to keep this. Whatever profits you make today, hold it. You'll feel good going into the weekend than feeling like I've got a revenge trade or be angry or pissed off, take it out on your family or whatever. Not that you would, but you know what I mean. So now we've traded above here. So now we're stuck inside this range here. So I'm not happy until we get above here and break this market structure to the upside. Knowing that lunch hour usually takes out the low of the day. 11:30 usually takes out the morning's low. And I like to see lunch hour come back and take that out as well. But I'm looking for this little tiny level right here right now. This has been a great day. I've been enjoying this one. Thanks for all the questions too, because it keeps me tries to keep me a little frosty here. So thanks for all your questions, Craig. Appreciate it, man. You don't trust it yet. That's okay. That's okay. If we go, let's look at this on a monthly chart. Okay, let's look at this on a monthly chart. Back in 2009, we have a big dip in the market. We have a fair value gap here. Let's just do the same principle, my same setup that I've been showing you every single day here. We have a run below some old lows. We have a reversal, body trades above it here. Now you don't get an opportunity to get in. Look at this range, right? Always look at the range that you're in, and you've got another fair value gap above you here. So if we continue to run higher, that becomes the next area of interest for me. From there, body trades above it, you get back inside it, Now you're looking for this high to get taken out. These relative equal highs and this breaker that runs down and takes out all these lows. You want to see that provide a level of support once we get above it. So this is a 1 minute chart. Ignore the fact that it's a 1 month chart. Again, fractalness, right? It trades above right there. See how it trades? The body closes above it. And then what do? Months later, we come back into it. There's the breaker. And then we continue going higher. Now you wait for a reversal to happen that clears out coming back the other way. Nothing. So all through 2009, 2010, we get a bit of a, or 2011, you get a bit of a reversal back to your area that you're looking at for support. Do you get support off it? Great. Wait for it to break that high again if you want. If it breaks that high and returns to the high, then take it. Breaks the high, returns to it, take it. Okay, good. Now you wait till 2012 before you decide to get in on it again. So it comes back and gives you your perfect entry for a long. You haven't broken any swing patterns on the way back down. Watch it riding all the way back up. There may be a little something in here, but it already ran you out and took out your low anyway, so you wait for the reversal. Here's the reverse. Now we've taken out this low. Let's do this rinse and repeat again. We want to show Craig the love here, man. Stop loss is down here. It's huge. It's when you're managing big funds. Closed above, inside, closed above, inside. We give a little bit of a wick down here. Give our friends some scares. We do not want to see 50% of that wick get taken out. And then we continue going higher. Look for this one if you want, right here. We'll call that the breaker. No. Boom. Oops. Anyway, that one right there, it traded above it right there. You come back inside it right here, and then you continue going higher. Don't trust me, man. Check it. Go back and check it yourself. You'll see. It runs through, comes back, runs through all these guys in here. There's the reversal. Now that these old lows have been taken out, body trades above it, comes back all the way inside it, drops below, drops back up above it again. This is a couple of months where you would have been bashed around. Stop losses way down here, obviously. Trade through it, come back up. So look, watch it right there. And you'll see a level of, just put it on a 1 minute, even though you know I mean 1 month. Finally traded above it again, came back, perfect entry for the long, continue going higher. Reverse, close below it. Right there you go, ooh, we're reversing, comes back up, rips all the way back up, gives you an opportunity to take your trade off that is long for a short. Round out all of these lows. You go, oh man, that's great. It ran out all the lows. You wait for the reversal. Here's the reversal. Body trades above it, comes back, hits it perfectly here, and then goes higher. That's a 1 month chart, my friend. That's a 1 month chart, and that's years in the making. Anyway, we can do a rinse and repeat if you like, over and over. Trade, there's the reversal right here. Body does not close below there, so you're expecting it to come back up in here. If it doesn't, if it takes that low out, then we're looking for this break-in structure to the downside. Body trades below that candle right here. We trade back up inside the consequent encroachment, or the mean threshold of that candle, then go hammering down, take the lows. Wait for the reversal. Body trades up and through it. Wait for this candle here if we don't get this reversal back into here. And it trades above it right there, and tippy tappy, come back to it, and we continue on. Sorry. Anyway, Craig. Do you get it? Do you see it? Do you see it? That's just one setup that has appeared I've now shown you it from a 5-second chart, all time frames, right to a month. It has to be, you got to get in your head that if it's fractal, it appears on every time frame. If it doesn't, then it's not algorithmic. Now, first of all, you got to get your head around the idea that there's an algorithm driving this whole thing, right? You want me to do daily again? Where do you want me to take it from? From a swing point. Take it on any swings if you want. Here's the reverse. If it cleans it out, we don't get a chance to tap back on it. Look for this old high right here. Cleans above it. Right there. And literally gaps down and gives you the high to go up higher. Take out that old high. It closes above it. Look for it to retrace back into the top of it. Right there. Bing. Bing. It hits it. And then you want to see a continuation on the upside. We have maybe a little reversal in there. Let me see. Yeah, a little tiny guy right there. Trade below it. You don't get a chance to get back in on it. Look, wait for this candle. If it takes out the lows already, then you wait. That would be your objective, or you run in inside this range here. From here to here. There's 50% right on the money. Just wicks into the discount array. What trades right back into. Let me squeeze this down. You'll even see why right there. The gap, and watch. Bing! Equilibrium of the gap. Reverse, trade above, doesn't come back into it. So you wait, it trades back right there, closes above it, trades back inside it here, and continues going higher. People think this is all random shit. It's not. All this cleaned out here on this return back in. Reversal. Body trades back up inside it. Comes back right back here. Look at that body. Right into it. Trades back into that range. Comes back. Hits it again. See how the bodies are respecting it? Note the wicks come through. Bodies respect it. And we continue going for the highs. You see a reverse. Let's go with the reverse right here, this clean one. Wait for a body to break through it. It breaks through it. And see how this big bold candle rips through this one, rips through this one, rips through this one, and then stops, doesn't take that one out. So look for the one right behind it, trades back inside it, takes the lows. You get one opportunity now that we've cleaned out that guy. We trade one more time into him, and then down we go. Look inside this range, 50%. Rinse and repeat all over again, my friend. Here's the reversal. We take this old high. Body trades below it, comes back up inside it right here. We just closed up above it, back into this order block here. Trade below it again. Trades back up into it again right there. Bing, bing, bing. And this almost sounds like Donald Trump there. Bing, bing, bong, bing, bing. Anyway, so there's the reversal. Off of here, we're back into this range. Look for this guy here. Look for this guy here. So I'll be drawing that out from, here. Your downside objective, area of interest for me is there. Discount array is right here to here. And we're just coming into that now. Does that make sense, Craig? Into late September. So another thing you can use is seasonal tendencies. So let me show you my seasonal tendency that I have. And you can get these off of September. If this is our declination, we're declining now from August. In September, we're looking for seasonal tendency is for NASDAQ to make a drop down into October. Are we making a drop down into October? This is our daily chart. Are we making a drop down into October? What's sitting below us? We've got this liquidity sitting below us here, that 50% of that wick. If October is the run down, I'm looking for a run into this liquidity down here for October. That's where I'm looking. Follow a seasonal tendency. It's following a seasonal tendency. So anyway, and if seasonal tendency is clearly what's the market been doing over the years? Basically, it's a snapshot of how the algorithm's been performing for the next, that was over 40 years, I think it was. What does that say? That's an old one too. It's equity, go to equity clock, you'll see it sitting in there. So that's our little bump up in August. Now our run down into October. And then we're expecting September, October to be the low. As is, and this is not a be all end all. It's obviously just a bellwether right now, kind of giving us an idea of where to reach for. We got weekly open, new week opening gaps below us. So to me, there's just a higher draw on liquidity on the downside right now than there is for any big resurgence to take out an old high. When that downside liquidity on the daily is sitting way over there. So let's go into a weekly chart. Craig says, predict the next week, Darren, week or two. All right, Craig, here's my next prediction for the next week or two. See where she closes today. My objective area of interest. If that doesn't hit that today, I'm looking at that tomorrow, or sorry, on next week. And I'm going to see how it reacts off of that. There's my discount array. There's my premium. Where's my premium? Premium array is right in here. And my discount array is down here. It ran through all of that, closed below that, came back up inside the order block, ran us all the way down and gave us equal lows. What I want to see now is, and then we ran all the way back up inside that range, optimum trade entry reversal off this order block, continuation on the downside. This right here did not take out any old high, so I'm not expecting this to hold price. It doesn't. That right there for continuation to the upside is what we want to see hold. It didn't. We just started eating through it, right? So where it closes today is important. I want to see whether or not it closes above this level. And if it doesn't, if it closes this below here, then I can expect next week to run back up into this level here somewhere, into this range, and look for a reversal on the daily to continue coming down for 50% of the wick, this level here, and then September, October level to start running back down and below these equal lows. That's my prediction, Craig. How's that? We'll see if that's true. You can keep the levels on there. Screen capture it if you want. I want to see this stay open, and I want to see this just come back inside here and leave this piece open, create a fair value gap in here. Maybe this would be great if we had the week come down, just bounce around inside here. Next week, open up, hit this level, and start driving through these. So week one, small week range in here. unless we start gunning for this lower, but that's okay. Whatever it is, I want to make sure that my level is supported here inside this weak fair value gap right here. We can come back, find support at that, consequent encroachment, look for a reversal, start coming back lower. I do not see an opportunity to go higher yet. This is definitely bearish with equal lows below us. And that little 1709.8 still sitting there untouched. Yeah. And again, what will govern us will be on the daily reversals. And if the daily reversals give us the support to run back into this level, you look for 4 hour, look for a reversal to get back into that level if you're onto a long-term trade. Or 1 hour, we look for a nice little reversal to get us back into a higher objective, and then we look for another reversal on the 1 hour to get us back down here. I'm bearish for the rest of the week. So you look for continual, that's my overall objective, and I look for lower time frames to support that objective. And where it fails for me is if I close above here. Then I'm looking for another return back into this fair value gap here, and I want to see us get above that level to go higher. So in between here and here, I do not want, I just want to see it come back, tap it, and go. How's that? Did that answer your question, or did that sound too vague to you? I went lower for the next couple of weeks. Yep, 50% of the wick, and then the equal lows. That's right here today would be really neat to see it hit consequent encroachment. And we also have, ooh, yeah, that little guy right there. Area of interest for me. I'll put it as area of interest. Oops. I don't know why that left. There you go. Area of interest. Expect it to hit that. It fails, it goes through it, fails, comes back into it, finds support. So it says, nope, I'm not going any higher. I'll give you an opportunity to get short, and I'm going. I come back for the kid. You know, the bus is leaving town. I come back to pick you up and leave town. Okay, 7 more minutes, and that's it for me, folks. I'm out of here for the day. I hope you had a lot of fun, because I sure had a ton of fun. And there's only 9 people in here that got to see this kind of trade today. That's okay. I hope Michael has just been calling it like a demon too, which I'm sure he is. I like your daily buys, each day updates. That's so basically all I'm doing is just running the same my same setup. It's my bread and butter setup now. I see it on all time frames. I've seen it enough times for it to be reinforced for me. So that's my go-to thing. And again, the purpose of the show is just to kind of show you guys the trying to stay in price action. Where does it fail? Got to keep asking yourself, where does it fail for me? If I'm on the wrong side of this, where does it fail? And if you're getting like Hadi and he's starting to get into looking at 30-second charts and catching these reversals, look at those higher time frames. Look for logical levels you'd expect to see a reversal happening. Come down to the lower time frames, and that's the sniper just zeroing in on his mark, putting his crosshairs right where you want them. And that's the kind of setup we're looking for. And as you can see, sometimes it's a trap. They set you up And you got to know the difference between when they're setting you up for a trap and to go lower and when it's going to go higher. When you want to see a change in direction versus change in direction with a break in market structure. So we don't need this light on anymore. I'm getting tons of sunshine coming through that my blinds here. Turn it the other way. What was that? Nope. Yeah, that's not so painful now. I want to see this continue to come up into here now. Use this order block for support and leave this open. Right there, you want to see that start climbing back up. We're starting the 1150 macro. $55. The next couple of minutes, I want to see that hit consequent encroachment at the best and then go higher. Consequent encroachment. That's got to leave here. I don't want to see it come back down again. I just want to see it get out of dodge now. Nope. She ain't done. Going down. See, it just came back up into the mean threshold of that order block. Come lower. Look for this guy, this open price right here. The fill of that fair value gap. And then we'll see if it's got to get above here now. And use this for support. One more minute and I'm out of here. I hope you guys have enjoyed yourself on a Friday. And Craig, you're out of here, I guess. Is ICT still going? Yep, he's still alive. Does this whole price now? Oh, you're heading out after me? Okay. So remember, our overall bias is lower for the rest of the week. So my bias is lower. If you end up getting a retracement Don't hold on for anything super bullish in terms of optimum. We're going to end up getting our TGIF Fridays. Let's look for a TGIF Friday set up here. We'd have to see a low set up in the morning or the afternoon at 2 o'clock. That'll be our I don't know why those two are sitting right there. Let's get rid of one. TGIF Friday. 1, 2, 3, 4, 5. There's the high. If we end up coming into this level, I like that level right there. TGIF Fridays. This will blow your noggin, Craig. If this level right here is as low as we go today, I'm just pretending, by the way. I don't know what the low of the day is going to be. Nobody knows what the low of the day is going to be. I like to see this objective get hit. If it is, we should close. We should start to see a reversal around 2 o'clock this afternoon. We should see a reverse back into 20 to 30% of the range. So if it's in here, we should see, if let's say we come all the way down to here. It blows all the way down through lunch hour and then comes back up. We should see 20 to 30% of the day closing in this range here. It's in here, or there. Looking at this one here. So wherever it ends up, pull your fib tool from the high. Wherever we have that swing point occur this afternoon after lunch, 1:30, 2 o'clock, look for that reversal to happen on the 15-minute, half hour, whatever you want. As soon as you see that reversal happening, that'll be the low of the day. Drop your fib tool right on the low of the day. And then as soon as you see that reversal on the 15-minute chart, 5-minute chart, look for a retracement back into this level here. And that could be quite a few handles. Like if it went from here to here, man, that's huge. It's still a couple hundred pips. So anyway, that's what you're going to do for TGIF Friday. That's been great, Hadi. Good for you. Good work today, man. Good work. I like the way you're catching things. I like the way you're seeing things. It's probably because you're seeing the same thing I'm seeing, the same thing I'm preaching every day. So I'm glad you're catching it and it's affording you some money. Good for you. Thank you. What is your PM thought? That's my PM thought right now. For a TGIF. That's what we all kind of hope for, is a TGIF Friday setup. So on the lower time frames, I'm looking for, when does price hit an objective that I expect to see a reversal on after lunch, around 1:30-ish. You're looking for a reverse. And this looks like a great place for it to happen. This looks like a great place for it to happen. This looks like a great place for it to happen. Or this big monster down here. I don't know why we have that chosen. Level, oh, was that a wick level? I think that was a wick on a weekly or something. So this has been a huge run down this week. Like, look at that. It's over 1,000 handles this week. 1,000 handles from 9685 to 18 or 84. So we're 1,200 handles. And we're getting into this little range here. So first area of interest is here. if you get through that, see how we're hitting the consequent encroachment. Watch for reversals, and if it keeps going through that, look for your next target. And look for reversal, and then get on those lower time frames, 1 hour, 15 minutes, and look for the reversal to happen. And when you see it happening, and it should be after lunch, then you can catch yourself a nice little retracement back into the weekly range for a TGIF return. But that's it for me. That's my Friday done with you folks. I'll be here with you again next week. Have you guys have a safe week. Enjoy your time, and I love you guys. Thanks for popping in, Craig. Thanks for all your questions. I appreciate it, and I love showing you the algorithm and how it's working. I love showing you the price action on a 1 minute chart, and I love that you're getting excited about it. And you start to see that, holy crap, there might be something to this wild accusation that the algorithm runs the market. And we're here every day to prove to you that it does. Right? And we're here to show you every day. It's not just me talking about it, it's me showing you as well. So hopefully you get to enjoy that. If you like it, hit the like button and tell your friends, pop in, bring some friends. We'll help them all out. We'll get the whole world seeing the algorithm for what it is. So anyway, I hope you guys enjoyed that, and I will see. Ooh, look what we get in here. No. It's got to break some structure for me. I'm not going to get caught in this whole crap here. If you're inside this range, look for this guy right here. Get above that and this, and then we're talking. Anyway, I'll see you guys on Monday. Enjoy your weekend. Spend some time with your family. Give your friends a hug. Go hug a fireman, because we don't get enough hugs from the public. That's all I'm saying. So anyway, I love you guys. Take care, and we'll see you on